Hey guys, this is another video on ZB. In the previous one, I was talking about the structure of this wave 5 coming down and how it seems sort of absurd to have a 14-point rip for wave 1. And upon further review, I think that it just is not the correct structure. And there's two alternatives that I'm looking at. So the original channel I was looking at for wave 1 was connecting this 2 with this swing right here. And I was looking at all of that as a single wave and a channel we broke out down here. But what I'm thinking now is that wave 1 is tighter, the channel. It connects this 2 with this 4 right here. That is wave 1, and that is where we broke out. Which gives wave 1 a much more reasonable 160 to about 151, a 9-point run. And so that leaves two possibilities. That this was wave, 1 down, 2 up. That this was wave 3, already complete. This was wave 4. And we were already in a wave 5, and we're in a wave 5 of that 5. Right? So let's look at that possibility first. So that would be the 1 down. If we just want to throw some labels on here, I'm on the 2-hour chart, by the way. It would look like a 1, 2, 3, 4. No, check that. 1, 2, 3, 4, 5 ABC. So this would be a 1 down here, a 2 up here, and then a 1, 2, 3, 4, 5. That would be a 3 down. This crazy rising wedge thing would be the 4, and 1, 2, 3, 4, 5. This could already be 5 of 5, and in this scenario we will never make it to the weekly log channel that I've been talking so much about down here. They will front run it. We will find some form of support right in the neighborhood of this stealth fib line, and the origin of that is, we have the secular channel here, which we've definitively broken on a weekly closing basis, which sort of confirms that this was a giant 5-wave move up, 1, 2, 3, 4, 5, a big ending diagonal. Now we've broken trend. But anyway, this stealth fib support comes from connecting prior swing lows that wicked outside of the channel in 2000 and when was that? 2007. So who knows if the market has any memory of that? It's possible. And so back to this. Under this scenario where we're in wave 5 of 5 already, and again, wave 3 cannot be the shortest. So I just want to, if we measure this wave 1 from the top, and I'm using conservatively this low here and not this one because I think that was an expanded flat correction. So this is the conservative measurement, and then we draw to the top of a possible wave 3. Wave 3 is much shorter. It's not even 7/8 of wave 1, which means that of 1, 3, and 5 down, 3 can't be the shortest, so 5 cannot be longer than 3. So if we measure then wave 3 here, 1, 2, 3, 4, 5 to the bottom, and then we drag to the top here, this structure would be invalidated if this wave goes past 143.18. That would mean that wave 5 is longer than wave 3, and that's not the correct structure. So I've put that line in an alert on my chart at 143. Did I get that right? This says 143.18. Draw to that. Yeah, 143.14. Is that right? Yes, it is. 143.14 would invalidate this straightforward 1, 2, 3, 4, 5 structure. The other possibility, I hope that's clear, just in an impulse wave, you have three motive waves, 1, 3, and 5. 3 can't be the shortest of those three. So 3 is already shorter than 1, which means that it can't be shorter than 5. If 5 goes past here, it will be longer than 3, and the structure is incorrect. So that is a key level I'm watching. And the other structure, which would probably get us to the bottom of the channel, is that this was the bottom of 1, that was a 2, and this is a 1 of 3. That's a 2 of 3, and this is a 3 of 3. And then at some point we'll have a 4 of 3 and a 5 of 3, and that will end the 3 down here. And then we'll probably have a sideways choppy wave 4, which will be basically an accumulation phase for a swing long. And then we'll have a 5 that may punch the bottom of the channel. And so we'll know if this is not correct. If this is the 1 of 3 down and we have a 4 of 3, it can't come back up across that level. And that level is the low here at 146.10, which I've put on the chart. Did I get this correct? Yeah, it's over here. So if this is a 1 of 3, 2 of 3, 3 of 3, if we get a 4, it can't come back up above that red line. So we have a clear invalidation level for each of those structures. We are either in 5 of 3, I'm sorry, we are either in wave 5 of this entire fifth wave down, and we're not going to touch the purple log channel. We're going to front run it, and we have bullish RSI divergences everywhere on every time frame, so that is certainly possible. Or we're only in wave 3 of 3 down, and this certainly has felt like a third wave, which would get us to the bottom of the channel and the 618 target of this lows to lows extension, which was always sort of my favored scenario down here. So I hope these two red lines, the significance of those is clear. As long as we stay above 143.10, this has the potential to be a bottom right here when no one's looking for it. And to tie this together, I always imagined that ZB would bottom when the 30-year yield was capturing the target of its long setup here at 279. And Thinkorswim doesn't give live data, but MarketWatch does. And today's high print was at 2709. Call it 271, which would put us just inside this gray box right here. So yield is getting close to capturing its target. And this is a weekly chart, and yield would have a bearish divergence on the weekly chart, this high relative to this high. And so sort of the map is we will capture this target, and then we would have to watch the next measured move long. Well, it is possible that we just keep going, that we go all the way to the 618 target. So let's not discount that. It is possible. But I think the more probable scenario is that we capture this 236, and then we'll be, either at the purple channel, or we'll just be floating around down here building bullish divergences. And then bonds will finally have a counter rally trade, and yields will come back either into the next measured move, or what I think is more likely, they will come all the way back into a long from lows. Right, so price could have some room to run. That's sort of the map. So right now we're sort of waiting for yield to capture their target, and we're waiting for price to I mean, this could be a bottom right here. We just don't know. So they're trying to trade another lows to lows extension. So that'd be 1, 2, 3, 4. So this would be a fourth wave relative to this structure, I think. There'd be some sort of 1 in there, a 2, a 3. This would be a 4, and then a 5. So if this extension holds, they're trying to keep the hourly closes below 144.13, and we trade through this level tomorrow, then we're not in wave 5. We're in a wave 3 of 3. I hope that's clear. Is there anything else I wanted to say? So I'm glad I followed up on that, and that's why I like doing these videos, is it helps clarify my own thinking. And in hindsight, it was absurd to think of that 14-point rip as a single wave. No. Wave 1 ended right here. And I think that's everything I want to say. So watch the invalidation levels, watch yield for yield capturing its long target, and if this isn't the bottom, if we're not in a wave 5, then it's coming. It would be kind of nice if it came at the end of Q2, so that we could be buying the Q3 contract down here for a swing long. That would be sort of an ideal scenario. Yeah, if we're down at 140 in like May. But sort of the issue is we're so far extended from, say, the weekly center line, which is still up at 155. We are 11 points below. We are over a full point outside the lower weekly Bollinger Band. So when yield captures its target, there's potential for, it seems like, a snapback. I don't know if there's energy, if it's just me that it feels stretched to the downside, or if it's just bonds are really that unloved right now. Okay, that's everything I wanted to talk about. Thanks, guys.